clock is ticking and all eyes are on her. Finance Minister Nirmala Sitharaman. After corporate India, banks, NBFCs, real estate and infrastructure companies, will the government finally turn its attention to the Aam Aadmi, to you and to me? Will Budget 2020 put more money in the hands of we, the people, and in turn give a consumption boost to the economy? Hello and welcome to this special edition of Money, 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 the Budget Classroom. Over the next 1 hour, this wonderful audience right here in Mumbai, and we have a pretty packed house, by the way, not just Mumbai, also people coming in from Delhi, Bengaluru and Chennai. All of you all get a chance to ask questions to our panel of experts. We are going to discuss everything threadbare: income tax rates, deductions, taxes on your investments, and of course, let's not forget housing. Let's start off by introducing our wonderful panel of experts. They've made time to be here with us over the next 1 hour. We have with us Kalpen Parikh of DSP Investment Managers, Radhika Gupta of Edelweiss Asset Management, Ashish Shanker of Motilal Oswal Private Wealth Management, and of course, the people in hot demand these days, the tax experts. We have with us Mayur Shah of EY and Parizad Sirwala of KPMG India. Ladies and gentlemen of the panel, thank you very much for coming through, and ladies and gentlemen in the audience, thank you very much for joining the conversation and making it very, very interactive. Well, the big question, let's first get a quick view from the panel. Is this going to be the Aam Aadmi budget or not? What is going to be the DNA of this budget? That's what I first want to understand from the panel. Quick 30-second run through. Kalpen, let's start with you.
I'm expecting it to be a growth budget, which will trigger growth because that's something which is lacking in the economy. And if we get back into growth and better jobs and better salaries, it automatically becomes an Aam Aadmi budget.
Okay, so growth is going to be the mantra you're saying, but you're not really sticking your neck out on this one, whether the freebies and the giveaways will come or not.
Wait and watch.
Okay, Ashish, your thoughts?
Yeah, I think lots has been done for the corporate sector so far to spur demand. I am betting that this is going to be an Aam Aadmi budget. They will have to give away more to the common man so that they can spend more and spur consumption.
Okay, Radhika?
I think in consensus it's definitely a consumption focused budget and it's an individual focused budget. I just don't know if that means necessarily tax breaks, which is what we all associate with the budget. It could be things like job creation, it could be a lot of other ways to spur consumption. So it's consumption focused, but I don't know if freebies will come.
I'm going to come back to that because that was my follow-up question. I'm coming back in just a minute. Parizad, for the Aam Aadmi or not this time? Every year, Parizad and me and Mayur, we all sit together with a list of ATC deductions, hoping something comes. Could it happen this time?
I'm going to put my bets on what Ashish said because, there's a compelling logic. It's that time of the year. 11 days to go. The personal tax expectations of the common man is reaching absolutely a feverish pitch. And seeing the bonanza that the corporate sector sort of got by way of tax cuts, there is definitely a case for, soaring expectations from the Aam Aadmi. So my bet is on the populist budget, but let's wait and watch.
Okay, brilliant. Mayur, are you going to concur?
So my thoughts are a little different. I would agree with Radhika in terms of that, it will be, growth budget or, spending budget. But I doubt there will be much more leeway which will be given to the taxpayer. So I don't believe that it would be a kind of Aam Aadmi budget. We should not expect much from there.
Okay, so there you go, audience. The panel is divided and they're telling us to kind of sober down our expectations. Before I come to the audience, let's quickly do a very simple thing, a simple question on this. Income tax cuts or not, yes or no? Kalpen?
No.
No income tax cut. Ashish?
Yes.
Yes. Radhika? No. And Parizad?
Not the cut in the slab or the rate, but relief in the form of the rebate, which is the stated intent of this government.
So it's 2 versus 2, you have the veto. Income tax cut, yes or no?
No.
Oh God, it's 3:2. They're saying no, they're saying no. All right, guys, so we've heard from the panel. Let's now listen to what the audience also has to say and what have their sentiments been over the last several months. So in fact, what we're going to do is going to do a very simple snap poll. I'll ask 3 simple questions. If your answer is yes, just raise your hands. So let's quickly put up the first question on the board. Did you cut back on spending in 2019? Did you get more cautious with your wallet? All those who cut back on spending, please put your hands up. Okay, all right. So, well, it's not exactly a, crash of the consumption theory, at least here in this audience. We seem to have sort of a 30-70 kind of a split. That's the first question. Let's move to the second question. Let's pull this up. Okay, this we know. This has been a big problem. How many people in this audience bought a car in 2019? Anybody bought a car? 1, 2, 3. Wow, that's telling, right? If this is a quick dipstick, only 3 people in this audience of almost 50 members here. Anyone wanting or looking to buy a car in 2020? Anyone looking to buy a car? No show. This is telling you a lot, really. Okay, let's move to the third question now. So cars are a no-no for whatever reason, various reasons right now. Now this, we'll take this one by one. Budget expectations. Let's see what the House wants. Number 1, all those who want an income tax cut, please raise your hand. Can I put up my hand as well? Okay. Overwhelming. We all wanted. The question is whether it will happen or not. Let's move to the second one. Housing SOPs. How many people here think that there should be more tax incentives that get us to buy a home? Housing SOPs. How many people? Okay. Always welcome. Here also there's an overwhelming majority. Why not? Number 3, capital gains tax, which has become a reality in our lives, even if we're just investing in mutual funds. How many people would say, okay, don't do IT or don't do housing, just cut capital gains tax? Wow, this is a Mumbai audience, we know, right? They're very, very sensitive to these things. So I think we always want it all, and that's the takeaway from, this poll that we've had. Just a quick, throwback to the expert panel over here. Parizad, what do you think? I mean, everybody wants everything. The question is, funds are limited. We've been looking at the direct tax collections. Our colleagues in Delhi have been reporting it's absolutely abysmal this year. So if you were to sort of advise the finance minister on dividing that very small kitty, which tax cut or which deduction would you go for?
I think if you see the data and the statistics, they tell a revealing story that if you give maximum, where does the maximum tax paying population they lay? So I think there's a need for a 10% bracket between those 5 and 20%. Okay, because roughly around 60% plus of the Indian tax paying population, as far as individuals are concerned, is in that bracket. What I believe may happen is, because if I again go back in history, time in history, since 2014, I don't think, and keeping in mind the objective of widening the tax base, so roughly if you were to increase the exemption slabs, then 3 crore plus, my data indicates that 3 crore plus taxpayers will not be filing tax returns. And that's
if you increase the basic threshold, you're saying?
The threshold, yeah.
From what? Right now it's at 2.5 lakhs?
So 2.5, as everyone hopes that, it's, I mean, you can go sky high there, right? So let's leave the thresholds apart. But so keeping in mind the stated intent of this government is to widen the tax base and increase the number of tax return filers. I think the way they have brought about bringing reliefs to the common man, particularly the lower middle income class payers, is in the form of rebates, if you see traditionally. So through this rebate mechanism, which last year was 12,500, roughly around 5 lakhs of annual income anyways is exempt.
Is exempt. Okay. Mayur, just a quick take from you as well.
Yeah,
what do you think is the right recipe if you want to spur consumption, give away some SOPs?
Sure. So there are 2 things one needs to really consider is, as she rightly pointed out, we have to widen the tax base. I would believe that slab should change from, say, 20, instead of 20 you can make it to 50, so that it becomes much easier. There is more money which is available, because that class of people would then really benefit. Second is to also make sure that the way real estate is today, I think unless some boost is given to them, it becomes extremely challenging.
Okay.
So that's where somebody needs to look at it and say that okay, if you have one SOP, then probably interest
self-occupied property. We're going to de-jargonize and keep it simple. That's what tax people do, right? SOP, self-occupied property. Yes, please carry on.
Yeah. So self-occupied property, if the deduction which is 2 lakh, I think it should be increased to substantially high. I mean, my expectation is 10 lakhs.
Okay, we're going to come back to all of this one by one. Let's do one thing. Let's take a very quick break. We have just gotten warmed up. We come back on the other side of the break and get down to business. The audience has lots of questions on personal income tax rates, deductions, health insurance, and so much more. Don't go anywhere. We'll be back in just a moment. Welcome back to this special edition of Money, Money, Money. We are calling it the Budget Classroom, where the audience asks and the experts answer. And it's not just the Mumbai audience. We do want to reach out to many more cities across the country as well, which is why in just a bit from now, let's actually see all our reporting team is standing by. Thank you very much, guys. So we have, the Bengaluru voice with Mugdha. We'll go across to Timsi in a bit, who's joining us from New Delhi. And Jude brings us the expectations and the picture from Chennai. Thanks, guys. Coming back to you in just a moment. Before we carry on, for the benefit of the audience, let's just do one thing. Our tax experts were just talking about the income tax slabs, the current rates. Let's just quickly revise them so we're all on the same page of where we are with respect to the basic income tax limits, the rebates, etc. So bringing up the current picture for you, very simple. Up to 2.5 lakhs, nil. 2.5 to 5 lakhs, there's 5% tax, but remember the rebate was hiked, as Parizad was explaining. So because of that 12,500 rupee rebate, no tax up till 5 lakhs if your taxable income is 5 lakhs. Then we move to the next, then that's the gap that experts always point out. Between 5 and 20, there's actually nothing in between, and then of course the 30%. What is this? Now these are the proposed rates by the DTC panel, the direct tax code. The report is not official, but our colleagues have been reporting on this for a while. In general, the expectation is that the DTC wants 5 different tax slabs, just for everybody's understanding. You start off with up to 2.5 lakhs, nil. There's a 10% tax slab that the DTC wants reintroduced, 2.5 to 10 lakh rupees. Then you move to 20%. 10 lakhs to 20 lakhs becomes 20%. Remember, today everybody above 10 lakhs is paying 30%. So if this comes in, there's a straightaway 10% tax saving that's coming. It's actually halving from 30%, you're coming down. The next bracket is 30%, 20 lakhs to 2 crores, and above 2 crores you come to the 35% tax bracket. Now that's just a quick revision. It's time for your questions. So anybody who has questions on personal income tax, deductions, whether it's on ATC or even health insurance, anyone with questions on these elements, please raise your hands so we can take it one by one. Questions from the audience? Okay, lots of questions coming in over here. Let me start with you, sir. Your name, and then we'll get your question.
Hi, I'm Mehul Beda. I'm into financial advisory. My question is, can we expect increase in ATC limit, which is currently 1.5 lakh, and we are awaiting for long?
Okay, well there we go. Before I come to the tax experts, actually I'm going to ask our friends from the mutual fund world as well, because a lot of us utilize the ELSS limit, which is part of ATC. In general, Kalpen, what's your view? Should it be unbundled, increased? What do you
it should be, because it does two things. ELSS in a way encourages long-term investing, and we also need long-term growth capital. So more and more investors come and invest through ELSS. Not only they do wealth creation, but they also invest over a longer period of time. So it will be extremely valuable if the ELSS limits are unbundled and investors get that opportunity to participate.
Okay. On ATC overall, Parizad, we've been waiting forever. I think the last time the government hiked went from 1 lakhs to 1.5 lakhs was almost 5 years ago, I believe.
Yes, absolutely. It's archaic now. I joined Mehul in the plea to the government to sort of hike it upwards. There's a case. It's high time. I also would agree that, one is the limit should be absolutely double, triple, because it's a crowded limit. And if you're talking of spurring consumption and addressing the demand side, unless you give the carve-outs to the individual taxpayer, it's not going to be revived back into the economy. As he said, you have absolutely a bundled set of expenses, investments, whether it's your PF, your fixed deposits, your housing loan repayment, everything sits in that bundle of ATC, which is 1,50,000 annually. So it's time it goes upwards with particular specific exemptions. I want the limits also to be carved out for certain items, maybe like housing loan, principal payment, or we're talking of education of children. Look at the spiraling cost of every expenses that we live with.
We're actually in the midst of tax season right now for the current financial year. So Ashish, I'm just curious, when people come to you for last minute tax saving, the ones who do come, right, what is it that you're advising them these days? ELSS, or you're going to standard 5-year FDs?
See, like Parizad said, that the limit A is too small of 1.5 lakhs, and there are too many things bundled into it. So a lot of people who have taken loans for their houses, they exhaust that limit with the housing loans, right? So there is a very strong case to hike the limit substantially. And there is another data point which we need to be cognizant of. The personal savings rate in our country is at an all-time low. So this will also ensure, if you carve out a limit for ELSS, it will ensure that savings also go up. ultimately.
Well, little nugget. Just this morning we were talking to Sybil, and they keep a track record of the way we are borrowing. Dramatic increase, what I hear is dramatic increase in personal loans, in credit card loans. Even as the economy slows, unsecured credit is really booming. But that's a different debate. Thanks, Mehul, very much for your question. Any more questions? Income tax slabs? Sir, yes, your name and your question.
My name is Priyesh, and I would like to ask, in a bid to increase tax revenue, do you think the government will introduce inheritance tax? And if so, what are the cons to it? Why they would not introduce it?
You've asked the tough one, right? The tax that everybody is scared of, inheritance tax. Mayur, your thoughts? Because we had inheritance tax, I believe, in the 80s, right? And then it was abolished. What's the status around the world? And, because, as he's saying, tax revenues are so paltry, could it come back?
So I don't believe that inheritance tax should come, and it won't come. That's my feeling. The reason for that is very simple, that the earlier the cost of collection inheritance tax was so high as opposed to the revenue which was collected, and hence it was abolished. While in other countries, yes, some of the developed countries do levy inheritance tax. If you look at US, UK, Singapore or Germany, all country levies inheritance tax. But as far as India is concerned, it will be very difficult to digest that. For the reason that currently the collection is very difficult, because those who are supposed to be owning these assets are very small population. They would have done all that structuring as of today so that there is no inheritance applicable to them. Then we are looking at putting a system in place where to collect inheritance tax. So I don't think it should come.
The rates, I believe, internationally, Parizad, are very high. I mean, correct me if I'm wrong, it could be as high as 50%. If not more. What are the prevailing rates around the world? Just
it's around in the range. So even in India, traditionally, as Mayur said, when it was there, decades ago, what I understand is it was 85%.
Wow.
Okay, and just taking a cue
for every 100 rupees that you inherit,
absolutely,
85 rupees goes to the government.
Roughly around that. Of course, many years back. Okay, so I do sort of endorse what Mayur is saying, that in any case, there is also going to be practical challenges at times, right? So while one would love to receive the inheritance, you wouldn't want to have it shaved off in the form of taxes to the exchequer. And imagine a situation where you have, say, children inheriting, or people who are otherwise unemployed. If they have to cough up this kind of taxes on assets, I think it loses the objective. Also, I'll relate it back to the wealth tax levy, which was prevailing in India for quite some time, and it had outlived its utility. It was in a ways a tax on unproductive assets. People didn't understand it. The revenue collections were just not there. So I don't think personally inheritance tax is going to find its way in the fine print this year.
Okay, very quickly, we have time for one more question. I think Reema had a question on standard deduction. Someone had a question on standard deduction. Anyone in the audience? Yes, Reema, your question.
Yeah, I'm Reema, and I'm a CA working with a reputed firm. The question is, being a salaried employee, you always think, is there any expectations where the standard deductions will go up, because 50,000 at right now is very minimal?
So I don't think standard deductions will go up, because to whatever extent they had to give, unless they are removing all small exemptions which are there, then they may again increase it by 10 to 15,000 rupees. But I don't expect much to go on standard deduction.
Because that's what happened even last time. I mean, our medical reimbursement was taken away, transport, etc. And in lieu of that, we had the standard deduction get reintroduced. All right, ladies and gentlemen, we've heard a lot from Mumbai, and it's a very active audience here, but we also want to know what the feedback is from other parts of the country. So it's time now to head to the national capital. Let's see if we can touch base with my colleague Tim C. Tim C, what does Delhi want from the budget?
Well, that's right, Surbi. I'm here in one of the busiest markets in Bengali market in Delhi, where people are enjoying their evening snack, and I'm here to ask them what is their budget wish list. What do you think is your budget wish list, which finance minister should address in her budget?
The major thing is the income tax. Last time इन्होंने 5,000 का जो 5 लाख रुपीस का जो रिबेट दिया है, मैक्सिमम जो आज की डेट में टैक्स पेयर है वो ज़्यादा इनकम वाले हैं, उनके पास कोई 5 लाख का कोई भी बेनिफिट नहीं मिला है. तो दिस टाइम वी आर एक्सपेक्टिंग कि अब कुछ ना कुछ बेनिफिट्स दें.
तो आप चाहते हैं कि टैक्स स्लैब कम हो, एटलीस्ट 20 लाख तक की इनकम वाले को?
एटलीस्ट जो 5 लाख का इन्होंने दिया है उसका बेनिफिट सबको मिले. हम लोगों को वो बेनिफिट भी नहीं मिल रहा है 5 लाख वाला भी.
आपका क्या बजट विश लिस्ट है?
Well,
एजुकेशन के ऊपर है मेरा थोड़ा सा कि मतलब एजुकेशन में भी जो इतना हाई एजुकेशन रेट्स हैं आजकल, तो वो नॉर्मल पेरेंट्स अफोर्ड कर, इवन अच्छी खासी सैलरी वाले भी लोग अफोर्ड नहीं कर पाते. तो आई थिंक उस पर थोड़ा सा ध्यान देना चाहिए फाइनेंस मिनिस्टर को, क्योंकि इंडिया पढ़ेगा तभी तो इंडिया बढ़ेगा.
Well, that's right. What is your budget wish list, ma'am?
First and major thing is the tax. See, our cost of living is increasing and our income is also increasing, but the rate of tax is the same thing. So our in hand is still a very same thing. So we are not kind of growing.
So you think tax rates should get reduced?
Definitely, first and foremost thing of a general public is a tax rate.
You pay too much of taxes and you don't get too much out of your salary.
Yeah, first thing if we are going for a higher package, then we'll come in 30% slab rate. So that is a major issue.
Maximum amount you pay in your taxes. What about yours?
So I think for the major consumer market, the income tax should be reduced, which is actually required right now. And abhi hamare pas we pay a lot of indirect taxes. While having snacks, we also paying taxes. Salary is also getting deducted. So I think in this, the customer disposable income should get increased, which can only be increased by getting benefit from the income tax.
You really feel his pain, don't you? It's something that resonates with all of us. While eating, you pay. While going to the salon, you pay. You simply pay tax all the time. Very quick last question before we take a break. Parizad, back to you. In case the finance minister decides to accept the DTC panel's recommendations, how much saving are we looking at? Any back of the envelope, rough calculations? If your slab changes from 30% to 20, or from 20 you come down to the 10, I mean, is it going to be substantial?
So I think, while actually the rates are not out, as you said, the report is not public, and we've been talking of too many DTCs in their previous avatars, I rather focus on the current act, but I honestly don't have the exact statistics. But, if there is if the thresholds are increased, then there will be fair amount of substantial, as he said, increase in the disposable income. But I don't have the back of the envelope calculation.
Yeah, okay, let's keep our expectations tempered. We'll just wait for the announcement, that very last part of her speech, right? That's all, that's what we really wait for. Need to take a quick break. On the other side, we put the spotlight on your investments. When you go out and buy shares, there is the question of capital gains. When you're looking at mutual funds, again, there is a taxation, dividends, buybacks. All of that gets discussed on the other side. Don't go anywhere. We're back in just a moment. Welcome back to this special edition of Money, Money, Money. We are calling it the Budget Classroom. It's all about your income, your investments, your savings, and the tax that you have to pay on it, and what the finance minister perhaps might have in store for us this time. This segment is all about investments, whether it's mutual funds, whether we're looking at FDs, whether we're looking at dividends, shares. So let's start as usual with a quick sentiment survey across this audience. Same rules, show of hands if your answer is yes. We just want to know basically how you invested your money and what you did in the last 12 months or so. First of all, as the economy slowed, did you still go on making new investments? How many people made new investments in 2019? All those who did? Fantastic. So there we go. So investments are still happening. As I said, I think Mumbai, so it's a very savvy audience. Let's move to the next question. The next question is actually the one that, has been most heartening, I think. Did you continue your SIPs in 2019? How many people continued with their SIPs? Okay, in this audience, well, I think almost 65 to 70%. That's SIPs. By the way, the flows continue to be absolutely fantastic through the year. So it was really the faith of the retail investor. The third question, this is an interesting one. How many people in this year switched from fixed deposits to mutual funds, whether it was equity mutual funds or debt mutual funds? How many people moved out of the traditional fixed deposits? All those who moved out, broke their FDs, put the money elsewhere, raise your hands. 1, 2, 3, 4, 5, 6. Okay, so not bad. I mean, I think, Radhika, that's been the story, right? With the Edelweiss's Bharat Bond, I think that's the challenge you've undertaken to get more people to move.
I hope this is 100% in a few years. We'll be successful then.
Okay. All right. So, just a quick run through, and Kalpen, your thoughts as well. As you see, people continue to invest. I don't know where they were investing in, but just your thoughts on, in the slowing economy with all these things around us, how you've read the investor behavior.
So like you rightly said, a lot of awareness created in the last 3-4 years is paying off, because investors are realizing that when economy is slowing and unit prices are also slow, let me accelerate my investing. So we have seen SIPs continue, we have seen new SIPs grow, and we have seen emergence of a very interesting asset class in mutual funds called the dynamic asset allocation fund category. So we've seen a lot of money coming in that category, and that category does not have too much of fluctuation. So I think these are two big trends in the last 2 years. SIPs continue, and asset allocation funds actually have started picking up a lot of flows.
Okay, let's straight away move to the audience questions, and I know there are several. So mutual funds, ULIPs, buybacks, dividends, any questions in the audience, please raise your hands. We'll start taking them one by one. Okay, let me move to that side of the studio. Please do introduce yourself and then ask your question.
Yeah, my name is Mangesh Kulkarni. I am a mutual fund distributor. My question is regarding if an investor is willing to invest in mutual funds for tax saving, he has only option to invest in pure equity funds. Whereas in case of NPS and ULIP, he can go through debt, hybrid and equity. So why is this injustice on mutual fund investors? Thank you.
Now, this has been a long-standing demand. I think a lot of people who manage debt mutual funds, they've been saying that there should be a separate DLSS is the acronym that I picked up, debt-linked saving schemes, much like what we have on equity. But Radhika, considering the status of the debt markets, should we even consider or sort of wish this right now?
No, so I feel DLSS is a fantastic proposal, and I understand when we were talking to government about Bharat Bond also in that context, it's being seriously looked at, because actually 3 years equity is a great option, but there are a lot of 3-year investors who want to do debt, because debt is 3 years is a great horizon for debt, and you actually don't have many products in that basket that are tax efficient. So I'm actually reasonably optimistic that this time you will see something on the DLSS front. I think investors should have the choice of asset classes, equity, debt, and frankly even hybrid funds or asset allocation funds. Why should you just limit yourself? Because 3 years is a mixed horizon.
I'll take that point. Ashish, and your thoughts on this? I think originally when ELSS as a category was introduced, the idea was to warm up the Indian investor to the equity culture, the equity cult. Now, the equity cult has been here for a while. Is it time to become asset class, or at least sort of, product neutral when you're giving tax breaks?
So the whole concept of introducing equity in the ELS category was that equity is a long-term asset class and it does give superior returns over time. But if you look at the savings pattern in India, people do put aside long-term money in debt as well.
Absolutely.
You buy tax-free bonds for 10 years, 15 years. So I completely agree with Radhika that, the Bharat Bond ETF could be a welcome introduction in the DLSS category. So they can choose which funds they want to include. So it could be PSU debt funds, or the whole point is that you want to attract more retail savings to mutual funds as a product. So whether it's equity or whether it's debt, let the investor make the choice. So I'm all for including more categories in the ELSS space.
Okay, so everybody seems to be on board. The question is whether the finance minister feels that the time is right, whether she wants to do it right now or not. Any more questions on mutual funds or investments? Yes, please.
So, as an Aam Aadmi, I wanted to invest in NPS, but due to it's only 50,000, so should government increase to 1 lakh 50 or 2 lakh, and also EEE status should be implemented on that?
That's a good one, and I'm going to take the last part of your question first, because as we all know right now, NPS is only partially tax exempt at withdrawal. When we are withdrawing our money at the end of the the period, 40% of that money has to compulsorily go to buy an annuity, and annuities, as we know, Mayur, are still taxed in India. Why doesn't the government think of bringing it at par? You have EPF, which is tax-free at every stage, but NPS is still being treated like a bit of a country cousin?
Yeah, so there is only one thing which we need to note is EPF and NPS is over and above that. Therefore, one is already given as EEE, then whether you need another one also as EEE, without realizing the fact that EPF is only with respect to only employed persons or who are employed with some organizations. Whereas NPS is also eligible for even self-employed people can contribute to that. Second thing is that, it is not that the restriction is only up to 15,000. I think, you can, right now, without 20% or 50,000, whichever is lower, which you can consider. Of course, that limit should be expanded, at least for self-employed person.
20% of what?
Of your gross total income, and then, you just compare with 50,000 and then, make it happen. But certainly that needs to be covered as a part of, but I doubt they will cover these aspects. Only another thing which I just wanted to highlight, when we were speaking about ATC and that interest, or say, if you recollect, earlier government fund like NSC and all that, was part of and is still part of ATC, right? I think, the faith was that government security means money is more secured, and you are investing, trying to save tax, and therefore, you should invest in a secured market. So somewhere, I fully agree that, certain bonds or certain debt which are more secured, you should encourage them. This entire HIC, or what, to channelize particular fund in a particular area, that's the rationale for investment, or giving that benefit or deductions. But currently, if you're looking at infrastructure bonds or things like that, you can put it over there. And I can agree with the DLSS with specific direction that, you want to get into infrastructure or anything like that, then, it makes more sense than, just giving blindly that. Otherwise, NBFCs, we know that how it happens.
Sure. So, okay, I think the panel is in agreement. DLSS, if it's for the right kind of debt funds which are not very risky, probably there is a case. And similarly for NPS as well, at least remove the the exempt tax at the last stage, the tax that comes in, at least if that can be removed. Any more questions on investments, insurance? Yes. Can we know your name, please? And we'll just pass on a mic before we start.
Good evening. My name is Ankur Gajaria. I'm working with Deloitte, and I'm a research analyst writing thought papers on the asset management industry. So my question is for retail investors. We pay STT, we pay capital gains, and then we also get lower dividends because of the dividend distribution tax. So is there any chance of the dividend distribution tax or the STT or anything going a bit lower?
Okay, so let's take it one by one. You've put in lots of taxation questions in one. So let's take it one by one. First of all, on dividends, and I think that's the big buzzword these days, that whether there will be any restructuring or rationalization. For the benefit of our audience, let's just quickly recap. Right now, the dividend distribution tax is levied at the company level. So when the company is paying out dividends on the equity that you own, it's already paying that tax and then sending it to you. And then in addition, Parizad, they brought in, I think 2 years ago, this tax in the hands of the individual. If you are earning more than 10 lakh rupees as dividends, not just that, they put mutual funds in that bracket as well. So now on whatever dividends a mutual fund pays out, you pay 10% tax. That's a lot of different taxes on dividends.
It's a triple stage taxation if you see on capital, right? So there are more.
Those are the tax rates just for reference. The effective DDT, I'll just come back, Parizad, just to sort of bring everybody up to speed. The DDT at the company level is just a little over 10%. Again, if you're earning more than 10 lakh rupees of dividend income, then you're paying 10%. And once again, dividend from equity mutual funds is also 10%. Buyback we'll come to later. This was introduced in last budget. But so many different levels of dividend tax, Parizad. I mean, how does one make sense of this?
So as a concept, it's triple stage taxation on, something which is effectively the same capital. The company is already paying corporate tax on its profits. Then they distribute it. Again, the company has to pay dividend distribution tax, as we saw. And the third and I would say fourth also, as a recipient shareholder, dividends are now, of course, above a particular 10 lakh limit is taxable in my hands as a shareholder as well. And then the same share capital, if I ever sell it, then there's a capital gains tax if I extend that further. So definitely there are murmurs around. First of all, it gets very confusing even as a tax consultant to, reckon with so many different kinds of taxation. So I think if at all, it should be, only at the stakeholder level, which is like the recipient shareholder, perhaps a single stage taxation. So either do away with the DDT and, get it in the hands of the shareholder itself. So there is a lot of talk, and there's a lot of expectations around it, but whether it's done or not, we'll have to wait and see.
We'll just have to wait and see if there's any change in the DDT structure. Thank you for that. Thanks very much. I believe there was a question on ULIPs versus mutual funds. Yes, so if you can just pass on the mic over there. What was your question?
My name is Prateek. So my question was, can there be any restructuring into the taxation part of LTCG for ULIPs versus mutual funds? Because for a normal investor into equity, there is a taxation for 10% of long-term capital gain if we incur some gains over a period of 1 year. So why there is a discrimination towards equity mutual funds and not towards ULIPs?
I can tell you, I don't have a representative from the insurance sector on this panel. If they were there, they would say, no, we don't want anything to change. But, Ashish, let me start with you. You're the neutral party on the panel right now. Over the last year and a half, since mutual funds started getting taxed and LTCG was introduced, I've been hearing a lot of push from the insurance sector. They're saying, look, we are more tax efficient. We brought down charges on our products. I'm talking about ULIPs. So why not look at ULIPs in addition to mutual funds? How do you read through this debate?
See, fundamentally as an advisor, I still believe that insurance products should be bought for protection, and mutual fund products are best suited for investments. But given the tax arbitrage, yes, it does make ULIPs attractive from two points of view. One is, when you take out your money, it's tax free. Second, let's say if you run a dynamic fund on a ULIP platform, right, when you switch between asset classes, again there is no taxation or transaction charges. So it is attractive, but I would say that instead of saying that it's unfair, they should do away with the long-term capital gains on equities as well and mutual funds.
Then it would be Diwali and Christmas all over again, wouldn't it?
There is a recommendation where there is a recommendation which has gone to align the time period to other asset classes. So equity is 1 year, real estate is 2 years. So the recommendation is make equity also 2 years and exempt it from LTCG, because the biggest beneficiary will be the government. The maximum amount of equity sale that anybody is trying to do next year from disinvestment is the government. So what you'll lose in taxes, you'll probably make up in market cap.
Well, just to revise the tax rates, I'm sure everybody knows this by heart, but for those of you who don't, 10% is after 1 year, that's the long-term capital gains tax, and if it's short-term, less than 1 year equity holding, then it's 15%. I have a question on this as well, and this is sort of, I'm sure every investor feels this. If I'm switching out of a bad performing mutual fund because of this 10% long-term capital gains, and it's after 1 year, if I switch out, I still have to pay tax. And, Parizad, doesn't that sound extremely unfair? Shouldn't there be, and you can at least reinvest in property. If you reinvest capital gains from a property sale, at least you have some way of saving tax. Nothing for mutual funds?
So I quite subscribe to the concept, the philosophy, just make it simple for everything and, for any asset class. I think in line with what Mr. Modi also mentioned in his speech in New York, to infuse capital and, protect the sentiments of the investors. 2 years back, while we got the LTCG, and personally don't think that it's going to be done away with, but it's very important that, because it's, as you said, it's sort of kind of discriminatory on certain asset classes. But I think either drop the rate, and anyways the calculation on the listed equity shares and mutual funds is also quite complex in terms of what you substitute as cost, what you substitute as sales, okay? So I would subscribe to what Ashish said, just do away with it. But if wishes were horses,
But if wishes were horses, we can only hold on to hope. We're running really short on time, so very quickly we need to go across to Bengaluru as well and find out what that city is saying. What are their expectations from the finance minister this time around? Let's see if we can connect with our colleague Mugdha. Mugdha, if you can just give us the latest.
I'm here at one of the many tech parks in Bangalore, and I have along with me several IT professionals on what they are expecting from Budget 2020. Let's go straight to them. Are you hopeful of a tax rate cut?
I do look forward to tax rate cut because it puts more money in my pocket, which I can either use for consumption, which increases the GDP of the country, or put it into retirement saving. So,
Okay. All right. Let me come to you then. What are your expectations?
So there are two things I would like to talk about. One is, I think we need a more tax-friendly regime where
because today if you look at it, we pay income tax, and as a person I look at it as I've already paid tax on my income, and then when I go and buy things I have to pay tax again, right? So that I think that simplification needs to happen. So therefore there is more money in common man's pockets. The second thing is on the top taxpayers bracket. I think, to be very frank, I feel that people at the top level are being treated as criminals. We keep increasing the tax on that,
on the super
slab,
rich,
on the super rich slab. Whereas it would probably be better to go after those that don't pay tax at all and increase that taxpayers net.
Okay. And ma'am, coming to you then.
So as an individual, what I feel is most of the things what we are submitting as proofs now, they come under ATC. So they can be moved somewhere else, or they can be, something can be changed, because most of the investments we do come under ATC only. So I feel we're not able to save more there.
Okay, so the exemption limit under ATC should be increased. All right, thank you so much for joining us. So those are some of the key demands from professionals here in Bangalore. The taxpayer bracket should increase, the exemptions under ATC should be increased, and just overall the tax regime should be made taxpayer friendly. With that, it's back to you.
Okay, Mugdha, thank you so much for that. Well, the super rich, they got a nasty bite last time around, but we don't know. Again, DTC panel says that, change the slabs themselves. So we'll have to wait and watch if there's any relief on the surcharges. We need to take a very, very quick last break, but don't go anywhere because we have not discussed property. What about reviving the housing market? Will the budget have something in store? Back in a moment. Welcome back to the budget classroom. This is the Money special. We are getting you questions from across our audiences and our viewers in different parts of the city. In fact, let's go across to my colleague Jude now to find out what Chennai is saying and what does Chennai want from the budget. Jude.
I am, of course, at the premises of Boombox, the Chennai-based startup, to speak to some of the employees here in terms of what they want from Budget 2020. I'm given to understand that a hot favorite is no personal income tax, right?
Yes. Yeah, I would suggest have zero income tax, because this government is functioning more like a 6-year-old startup, and they have taken bold decisions. Let there be one more bold decision in their cap, as a feather in their cap. So that's what my suggestion is all about. So that there will be more money in my bank, I can spend more. Let them tax on my spending rather than taxing on my income is what I'm suggesting.
Right. So spending more money is really the flavor of the season when it comes to the wishes of India in terms of this budget itself, and that's something you resonate with as well. More money in your hands, right?
Definitely. I mean, if you actually see, they have already started to take that decision where they reduce the PF limits for employees, and similarly I would want them to take bolder steps to ensure that more money is in my hand so I can spend more. Don't force me to save on taxes by saving the money. Help me spend more. Right. That's all I want.
So saving taxes and saving more money as a result is probably a spiral that most taxpayers don't quite want to get into. So allow me to spend more, especially at a time of consumption slowdown, is something that's a hot favorite among most tax buyers. But you say not just spending, but it's also time to take a look at our tax saving initiatives in terms of investments.
Yeah, that's right. So my expectation from the budget would be, how we can diversify the ATC, and it should not be restricted only to a home loan or a school fee, but how can we bring other loans like car loans or personal loan under this category, and with this we can also support automobile industry, which is ailing right now, and I will have more courage to go and take loans, and so that I know I'll get a benefit. I'll have at the end of the day I'll have more money in my pocket.
Right. So the verdict and the consensus is quite clear. More money in your pocket, less money in terms of savings, and a diversification of tax saving initiatives so that you not only save more money, you also get to spend more money and support the industries while you're at it.
Okay, Jude, thank you so much for that. So can the government act like a 6-year-old startup? That's the view from Chennai. Very interesting one at that. But we've discussed ATC, we've discussed a lot of those questions. So I'm going to straight away actually cut to housing because we're a little less on time. Quick question, audience poll once again, a very simple question. Let's just put it up on the board over here. How many of you bought a house in 2019? one hand goes up in this house of 50 people. It tells you something, right? It tells you about perhaps just changing preferences or a slowing economy, but it tells you something. I'll tweak the question. How many of you are thinking of buying a house in 2020? Okay, well, we have a couple more. Property is no longer India's first love as it perhaps once used to be. And with that, I'm going to come to the audience here. Now, Radhika, you know, for the longest time since demonetization, we've been all talking about the financialization of the economy and more money going in financial assets. But looking at the condition of the housing market, and I know I'm asking a mutual fund boss this question, would it be perhaps time to consider a tax incentive or a push towards, you know, property, towards buying houses?
So look, there's an obvious bias, you know, because anybody from my world will say that physical investments should be kept, physical assets should be kept separate from financial assets. That said, I think the mid-tier housing segment needs a boost. I think the comment that was made earlier is that you have to align the tax laws to today's housing price reality. You know, even at a 30-40 lakh kind of home, you know, which doesn't get you anything in Mumbai and a lot less in smaller cities, the current deductions don't do anything. So make it easy for an individual to buy their first home. In most developed parts of the world, there are a lot of incentives for someone in their mid-20s or early 30s to buy their first home, and that's probably a good thing. So your first home is a home, and then investments, of course, can be financial investments.
Okay, I'll ask the tax experts very quickly. Mayur, do you believe that, I think it was 2 years back when they capped the loss from house property, because you could just buy a house, put it on rent, and then, you know, claim great tax advantages by the whole loss would be deducted against your taxable income. Now, that was capped at 2 lakhs in a year. Do you believe that really killed the housing market, or one of the major factors that kind of, you know, brought about the present situation? What would you want to hear on housing?
So, there are two questions you have asked. First is that whether it has killed the market or not, that capping the entire deductions or setting off of losses. It does, you know, kind of restricted, you know, considering housing as an investment pattern, and therefore, you know, people started switching over to other modes of investment. Certainly, because there you not only had a tax break, but you were creating a wealth for yourself in form of asset. It was a growing market. It was kind of good at that point in time. But
so what should be done now?
Right now, even if you do that, I don't think it will really boost the market, as rightly pointed out by Radhika, that, you know, currently we are not just looking at one item, we need to look at many more things.
Okay.
Especially the real estate has reached its peak, and therefore, you know, beyond this, what growth one can expect. Not only in India, if you look at world over, Australia or any other country, I don't think, you know, the growth is so much as we expect here.
Talking about sort of, you know, rentals becoming the new way to go, perhaps.
Absolutely.
Very quickly, Parizad, on housing, any tweaks that you'd like to see?
So this 2 lakh cap came as a dampener 2 years back, okay, because people had planned their taxes along with their aspirations of owning a home, which was relevant at that time. Also, if you see the bracket of certain income earners above 50 lakh of rupees, the surcharge came in at the same time. So it was, from their perspective, a double whammy. I think, you know, to the point Radhika said, even the affordable housing, again in line with the stated objective of, you know, housing for all by 2022, what are the tax incentives? And I'm a tax person, so I can, you know, relate to taxes. For a 35 lakh loan, you know, and for a 45 lakh cost of the house, there is an additional 1,50,000 Indian rupees.
But in the urban centers, that doesn't really
is it in sync with reality? Take a city like Mumbai, okay? What is the cost of housing?
Get your point. We're completely out on time. So I quickly want to take one last advice to the finance minister, a one-liner from our panel. Kalpen, if there's one advice that you'd want to give her.
There are too many taxes, too many rates, too many time horizons on multiple asset classes. Just simplify.
Simplify is the advice. Ashish?
Yeah, I have just two suggestions. One is obviously, like Kalpen said, to simplify the tax structure so that we can file the returns on our own. Second is look at growth rather than trying to cringe on certain expenses and, you know, deficit.
Go for growth. Go for growth. That's the message. Radhika, quick one-liner.
Two messages. Whatever you don't tax, don't change it next year. Be consistent. And second, focus on jobs, because young India needs jobs more than anything else.
Absolutely. Wonderful, I think, advice. I don't know if anyone in North Block is listening, but thank you very much, panel, for putting so many thoughts together. And I must thank this absolutely wonderful and vibrant audience right here for putting your point of view across as well. Thanks very much for joining in the conversation. We've completely run out of time on this special edition of Money, Money, Money. Many thanks for watching, and keep it with us right here on CNBC TV18 as we keep you ahead of the curve as we count down to the budget.